Good morning, students. This is module 5 of final accounts. I'm going to explain some points which are important about balance sheet. So let us start with the features of balance sheet. So the features of balance sheet, if you see, gives the financial position of the particular firm. So anything we will consider balance sheet as the basic statement to know the financial position of the business firm. Second is it's prepared at the end of the financial year, usually March 31st. The end of the financial year, we prepare the balance sheet. Then the other point you have to should know that this balance sheet is also known as a position statement, showing the position of the business firm as on a particular date. Then another thing you have to remember that quarterly statements. We know that business firms now, they will not wait for 1 year to prepare the balance sheet. They are preparing the quarterly statements. Almost all the firms, Wipro, Infosys, TCS, every company, Reliance, everyone will prepare the quarterly statements. So this is good because quarterly statements, if there is any corrections, they can correct it for the next quarter. So that is the importance. So continuing with that, you have to remember that in a balance sheet, liabilities are recorded on the left hand side and assets are recorded on the right hand side. You cannot change the position. Then how balance sheet is prepared? Balance sheet is prepared based on the double entry principles of accounting. Then another thing you have to remember that asset side should be equal to liability side. See, when you are learning the balance sheet, always we will learn that asset side should be equal to liability side. If it's not balancing, then you have to go back to your original entry and you have to check where you have made the mistake. So you have to correct it because balance sheet asset side will be always equal to liability side. Another important point, why we are preparing the balance sheet? What is the importance of balance sheet? Assets is equal to liabilities plus capital. A person is bringing capital and he's starting the business. So he will acquire assets and he will have certain liabilities also. See, this is the accounting equation. Assets is equal to liabilities plus capital. So this is the base for preparing the balance sheet. Now let us think about what are the differences between balance sheet and trial balance. So if you see that first point as the objective, why we are preparing balance sheet? We want to know the financial position. Whereas why we prepare the trial balance? Trial balance is to know the arithmetical accuracy. You know that trial balance is prepared from various account balances. So if the trial balance is correct, both sides, debit side and credit side, will tally. So the arithmetical accuracy we can check with the trial balance. Whereas balance sheet, the main objective is to know the financial position as on a particular date. Next is the frequency. Balance sheet, we will not prepare balance sheet very often. Usually balance sheet is prepared at the end of the financial year. Whereas trial balance, as I told you, the objective is to know the arithmetical accuracy. So anytime you want to check the arithmetical accuracy, you can prepare the trial balance. Now items included. Balance sheet will show you the assets and liabilities. Whereas trial balance, you can see debit balance and credit balances. Various account balances which are on the debit side, which are on the credit side, that you can see in the trial balance. Now what is the information they are providing? Balance sheet is giving you the financial position of the firm. What are the assets? What are the liabilities? Trial balance is giving you the various account balances. Now, whether these documents are included or accepted as a evidence in the court. Balance sheet is accepted as an evidence in the court, but trial balance is not included as an evidence in the court. Next is, you have to remember closing stock. Balance sheet is not including closing stock, whereas balance sheet includes closing stock. Whereas you have to remember that in the trial balance, closing stock is provided outside the trial balance. So I'll repeat, closing stock is included in the asset side of the balance sheet, whereas in the trial balance, it is provided outside the trial balance. Now types of accounts included. In the balance sheet, you have to remember that only personal and real accounts are included because nominal accounts are included in the trading and profit and loss account. So in the balance sheet, you will have only personal and real accounts. Whereas in the trial balance, personal, real and nominal accounts are included. Now whether the statements are published or not. Balance sheet is always published, whereas trial balance is not published because we may be preparing trial balance. Now it's all computerized. So on a daily basis also, to know the accuracy, we will be checking the trial balance every day. So it's not published. Now what is the source for publication? Balance sheet, you have to remember, trial balance is the base for preparing the balance sheet. Whereas how trial balance is prepared? It is prepared from various account balances. Now let us come to the point, similarities of trial balance and trading account. We know that there are differences. We have learned that what are the differences between trial balance and balance sheet. Now, similarities of balance sheet and trading account. Similarities you have to remember. In the similarities, if you see, both are statement of accounts. Both are both are statements. Balance sheet is a statement and trial balance is also a statement. These are not accounts. Next is date for preparation. You have to remember that balance sheet is prepared on a particular date and trial balance is also prepared on a particular date. Now, the third similarity you have to remember, by and to, whether it's included. See, in the balance sheet, by and to you cannot find that. In the trial balance also, by and to you cannot find. Whereas when we prepare the trading and profit and loss account, all the debit side we will write to, all the credit side we will write by. Now, we will come to the next point, the difference between profit and loss account and balance sheet. See the points of distinction if you will see, balance sheet and profit and loss account. See nominal accounts. Nominal accounts, that is, balance sheet will exclude nominal accounts because nominal accounts are used for trading and profit and loss account. So the remaining personal and real accounts are only included for balance sheet. Next thing you have to remember, in the profit and loss account, only nominal accounts are used. So personal and real accounts you will not see in profit and loss account. Now what is the objective of preparing the statements? Balance sheet, as we know that, to know the financial position. Whereas profit and loss account, the objective of preparing profit and loss account is to know the net profit or net loss. Now what is the position? How accounts are represented in the balance sheet and profit and loss account? In the balance sheet, left hand side will record liabilities and right hand side will write assets or record assets. In the profit and loss account, left hand side is used for expenses and right hand side is used for the income. Next thing is whether to and by are included. In the balance sheet, you have to remember that you cannot write to and by in a balance sheet. Whereas in the profit and loss account, it's an account. So all the debit side entries will have to and all the credit side entries will have by. Now the nature. Nature you have to remember that in the balance sheet, it's a statement. Whereas profit and loss account, it's an account. Now the time for preparation. Balance sheet is prepared for a particular date. Whereas profit and loss account is prepared for the year. 1 year. What is the accounting? What is the position? So that is what we are going to record with the profit and loss account. So profit and loss account is prepared for a year and balance sheet is prepared for a particular date. Usually the last day of the working day or the last day of the financial year. So this is what I want to explain with this module. Thank you.